In today's episode, we are going to be talking about inheriting California real estate and property taxes. In other words, when you inherit properties in California, how can you keep the property taxes that your parents had when you inherited the properties? We're going to be talking about for primary residences, and we are going to be talking about a little bit about investment properties as well too. We won't go into 100% detail, but we will talk briefly about some solutions that are available. To help us with that, we have Carl Lindner. He works for Assessment Counseling Services, and he is a property tax specialist. Welcome back to the show, Carl. How are you?
I'm doing great. Pleasure to be here, Jose.
I love it. So let's talk about, let's say I inherit a property, and let's say that I want to keep my property taxes the same. How can I go about doing that? Can I do it if I inherit 10 properties? Can I only do it for one? How does that work, and what does that process look like?
In other videos, we've talked about Prop 19, which was passed in November of 2020. Currently, one of the rules that changed was called the parent-to-child exclusion. Between 1986 and 2020, you were able to have your parents transfer properties to you, and you would keep their Prop 13 base value of assessed value, for up to $1 million per parent. And it didn't matter what kind of property it was. It could be industrial, commercial, homes, residential income. It didn't matter. Now, with Prop 19, the only way you can keep your parents' property tax assessment is if they had their primary residence where they lived in California, and then when they pass away, or they can also gift it to you, you have to take residency in that same house within 1 year of either the gift or the death. It's a little more restrictive than it used to be, but that's right now the most straightforward way to get an exclusion, at least partially, for parent-to-child transfer.
So let's say that I inherit 10 properties. Are you saying that I have to move, if I want to keep the property tax the same, I have to move into one of the properties basically, and I can only keep it for that one property, and all of the other 9 would get reassessed basically?
So it actually has to be the one that your parents lived in,
Got it.
or parents lived in. So all the other properties,
Are
whether
getting
they are,
reassessed.
yeah, they're all going to get reassessed, even if they're other single-family homes. The only exclusion you get is for the one your parents lived in, and then you live in afterwards.
Let's say that I move into the property that my parents lived in. What does that process look like to be able to keep the property taxes the same?
The maximum exclusion you get is your parents' current property tax basis, their low Prop 13 protected value, plus $1 million. And that is upon their death or transfer to you, that number is compared by the assessor to the full market value of the property. Let's say your parents are paying taxes on $200,000 when they die. It's only a $200,000 assessment, but the property is worth $1.2 million. You are covered because their current assessment plus the exclusion of $1 million gets you to $1.2 million. So you're covered. You're going to be assessed at their $200,000, their low property tax basis if you move in. Now, kind of similar to the Prop 1955 or older transfers, in that example, the property might be worth more. So let's say they're paying taxes on $200,000, but the property is worth $1.6 million, right? So you have to pay for the overage. You are only granted that low property tax basis for the low property tax basis amount, in this example, $200,000 plus $1 million. So that only gets you $1.2 million out of the $1.6 million.
So now you got to add 400,000 basically back to the 200,000. So your property taxes will be based on 600,000 versus the 1.6, which is still good. But if you have a property that your parents bought at 100,000 and now it's worth $3 million, there's still going to be a reassessment in that scenario.
Correct. That's exactly how that math works out.
How does that process work? Like, what are the forms that are required to be filled out? Is that a service that you guys can help with as well, too? Can somebody do this on their own? Do the property taxes go up right away? Meaning, like, do they find out that somebody died and they go right away? Or is there a chance that they could miss it? And if they do miss it, do they go back and charge you for time that they didn't charge you?
That's kind of how that works. It all depends on how the assessor's workflow is. And I don't want to get too inside baseball on that, but sometimes they're really behind, right? It's a government agency. They take time to get things done. Long story short, as of your parents' death or transfer to you, that is technically a change in ownership that can start a reassessment unless you file this paperwork, right? So in this example, you have to file a homeowner's exemption form which most people have seen only once in their escrow documents when they buy their house. It's a very basic form with your social security number and says that you live there at this house. It gets you a very small property tax reduction in general of about $7,000 in assessed value, which is only like $80 a year. But that little form has to be filed within the first year, that same 1 year that you're living in the property after you get it from your parents through transfer or death. So you have to file that form. And then you also have to file the claim form itself, the BOE 19, and that's for parent to child transfer. Where they make it unnecessarily complicated is that you have to file the homeowner's exemption within 1 year, but you have up to 3 years to file the Prop 19 claim form. It's almost like they don't want you to get it, because who's going to keep track of things like that? It is something you can do yourself if you feel comfortable doing it. But if you don't, companies like myself do offer that service in which we try to get all the paperwork done at once. We don't wait 3 years to file a second form, because that would just be a waste of time. We try to get that all done at once, so that even if the assessor does reassess you because they got to revalue the property when your parents died, they will eventually have to reverse it back to an excluded value if you file all the paperwork timely.
And if they reverse it at that point, would you get a refund?
Yeah, so if they're like a year behind in processing these claim forms, let's say they reassess you as of the date of death, but then 9 months later they finally processed the paperwork and you filed everything timely and you moved into the house within 1 year, they have to go back to the previous assessed value, plus or minus any adjustments like we talked about in the calculation earlier. So yeah,
So,
they would have to go back and do.
so let's say that I move into the property within the 1 year. Does it have to be my primary residence? Could it be like a secondary home for me? And then also, is there a limit to how long I can stay or have to stay? Or what happens if I move out and eventually make it a rental? At that point, does it get reassessed? And how do they know that I rented it out if it gets reassessed as well too?
So yeah, technically you have to make it your primary residence, as well as it was your parents' primary residence. It has to be both. What the rule is, they technically will reassess the property as of fair market value as of the time of death and then give you the exclusion. But what that means is they have a value as of the death. And for instance, like in your example, if you 3 years later all of a sudden don't want to live there anymore, they will increase your property taxes to, let's say it's 1.4, it was worth $1.4 million before you got the exclusion. They will take the $1.4 million and do the maximum increase of 2% a year, and move that forward 3 years. And then if they find out you moved out or are renting it out, they will go back to that new market value number plus the 2% escalation over 3 years. And just all of a sudden you have a much higher property tax base.
What usually triggers for them to find out? Is it like a change in the mailing address? Is it a change in utilities? What usually triggers it? And are there circumstances where they don't find out that all of a sudden you turned it into a rental property as well too?
This has been kind of the issue since this new rule passed in November 2020. The assessor's office is chronically understaffed in most counties in the state. They don't necessarily have a mechanism to figure this out. You are technically declaring under penalty of perjury that you're going to live there. And technically,
Forever?
until you file a claim form saying you don't live there anymore or it's not your primary residence, you're allowed to remove your homeowner's exemption, which is what you have to file within the 1 year. You can technically file a form to remove that. And that would essentially trigger them to know that you no longer live there and to increase your property taxes based to the fair market value. But do people do that? No.
People forget, basically, right?
Yeah, and realistically, I would say the only way that they can catch you is probably if you change your mailing address and you have someone who looks at it for more than 5 seconds and says, "Oh, I wonder if they still live there."
That would be like the only way.
To do that, but are they going to? I don't think they have the manpower.
Would they be able to go back and in time, like let's say you've moved out 5 years ago and all of a sudden it's been a rental for the last 5 years, would they, if that did happen, would they be like, hey, you owe us 5 years worth of higher taxes now since you moved out?
That's where it gets a little tricky. I don't know that it's been clarified per se. I know that in most situations, if you don't offer enough notice for certain other transactions, not this, they usually can go back up to 8 years. But there's no clarification as to whether or not they can actually do that for this.
If somebody wanted to hire your company, as of the time of this video, it doesn't have to be an exact number, it could vary. If somebody inherited a property and they wanted to make sure that it got done right, approximately how much would a company like yours charge somebody to basically help them keep their property taxes the same as to when they inherited the property?
Our minimum fee retainer at this time is about $2,500. Depending on the complexity of the situation, we'll calculate your new property tax basis. If you're going to go over the $1 million plus the previous assessed value for your parents, give you an idea of what your new property tax basis would be and file all the paperwork. Probably wouldn't be more than $3,000 spend as long as the assessor does their job, right? Or if they do something wrong and they don't process it timely or reject it for some reason that has nothing to do with how we submitted it, maybe they just didn't review it properly, which happens, then it might be a little bit more of a time requirement.
Let's talk about like inheriting investment properties, and let's talk a little bit about property taxes in those situations. And we don't have to go into too many details or all the nuts and bolts, but is it possible to inherit an investment property and not move into it and still keep the property taxes the same?
You would have to do some advanced planning. You would have to do some planning ahead of time. We can help with that. We help families all the time plan for certain occurrences. But for example, if we were to get to you after, let's say, both your parents pass away, there's not much we can do. There really isn't because of Prop 19. But that's why we want people to come to us beforehand. So if you have parents that maybe are older that have some properties, we can help devise fully appropriate ways of transferring property to maintain most, if not all, of the old property tax basis, which is important, especially if your parents have had properties for decades. It's just something that needs to be devised individually on an individual basis. We take a look at the history of the ownership and see what the best solutions are to avoiding a reassessment upon the death of your parents.
For example, like let's say you own a $20 million real estate portfolio and you want your kids to be able to keep that real estate portfolio and still maintain a healthy cash flow. And let's say you bought like back in the day, there's advanced property tax planning strategies where you can basically keep the property taxes the same. But what he's saying is it would have to be done substantially in advance and you would have to plan that. Now, just so you guys know, another thing to take into consideration is the step up in basis as well too. So I think having a conversation with somebody like Carl will allow you to be like, okay, what's more important? Is it getting the step up in basis, or is it keeping my property taxes the same? Meaning, what is the intention after I'm no longer here? Are my kids going to sell the properties right away? Or are my kids going to want to keep the properties for positive cash flow? And all of that would come into the conversation with somebody like Carl. If somebody wanted to get in contact with your company, what is the best way to do that?
Sure. So I would say Jose is completely correct. And when it comes to advanced property tax planning that we, devise for our clients, we are absolutely in sync with your estate attorneys and CPAs to determine what's the best course of action, right? Because if I save you maybe $50,000 a year on one property because your property taxes don't go up, but you lose a couple $100,000 and
step up in basis,
then what does it really matter? But there are certain situations where you want to make sure, and that's why we work complementary with all of your real estate or financial professionals to kind of get that going. And if you have any questions or you want to talk about this more, my phone number is 805-374-9500, extension 224. And I can be reached via email at clindner@acstax.com, or you can submit something to our website if you have a question, acstax.com.
Got it. Carl, I want to say thank you so much for coming back on the show. In today's episode, we talked about inheriting California real estate and property taxes. We talked about how to keep your property taxes the same as your parents if you inherited a property. And we also talked a little bit about briefly for investment properties as well too. If you've enjoyed this episode, make sure to hit that share button. And make sure to hit that subscribe button. And if you feel that this episode add value, make sure to share it with a friend. Carl, thank you so much again. And to our viewers, until next time.